All right, people. Um, uh, it's looking positive for tomorrow. Oil's up, bond, uh, close to 5, but the new one is 5 anyway. So I think it's 5.1 something. Um, we closed positive all around the board, and VIX was somewhat subdued compared to the past few days. Um, so let's get this going. And so Roku had earnings, I believe. And I don't care about Roku, but I'm just gonna show it because I think, as you can see, they went up after hours. So it was very much
Ma'am,
up.
are you gonna go or I'm gonna go?
And so they we can't even really see it, but
Hello.
yes,
Are you gonna go or am I gonna go?
I'm already going.
Okay, go ahead.
So they jumped up. Obviously, they had good earnings. Don't know why. But this is what you see here. And yeah, they did worse than what they thought. So this thing is totally out of whack, I guess. Uh, I don't know what to say other than that's why you don't buy earnings. I'm in this. I traded this all day, and at the end of the day, I caught a short on it. Um, but this was an all day thing for me, and I'm trying to see if it will come down a little bit tomorrow. It went based off of earnings. Earnings came out at the end of the day yesterday, and it went down and stayed down, and then all of a sudden, boom, it went up and just kept going up. So this was a very good day. I thought it may come down just from it jumping back up, but when you think about it, it only jumped back to where it had closed at. So it wasn't a real jump up. It just went back to where it closed at. And initially, this was just fake gold right here, where it had jumped down, what, $5 or $3, whatever it is. Um, so I'm hoping for a drop tomorrow. Uh, maybe close to VWAP, but I don't know. Who knows? It could keep going for all I know. So we shall see. Um, we had levels here, but to me, all of that's out the window right now. I don't think earnings were that great. They were good, you know. They surpassed both revenue and earnings, but it's nothing that I think this should go up to $120 for. So anyway, Meta, we have 4% for Meta today. And let's see how that looked. It basically diddle. It kind of diddle for like the first hour and then up. So things are going from the first 15 to the first 30 minutes, and now it's getting close. Well, this is still like the first 45 minutes, not the first hour. But still, it took a while to get going. And then even after that, it still kind of just hummed along until the very end. So, the last hour and a half, and then this time from 10:30 to basically 11:30. Um, coin. I need this to come up greatly. So yeah, I'm
It's been
just
coming up. It's
it
been coming up.
to come up.
It's
Um,
coming up.
so we'll see if it continues, but I needed to keep going basically. Um, Tesla, after some rough days, the last 2 days were halfway decent. Uh, so you had the short, and then you had a long. So hopefully people took advantage of that. Amazon, we're still looking at over 3%. Um, this was good for a long. Um, ooh, ooh, last 3 days, it's been really strong, and it's been strong where other things have not been so great. So Amazon was sliding down for a while after that suit with the federal government was announced. So last few days it's been doing good. It did a gap here and then has been continued up. So, but be careful with it because it could slide back down. Over all of this is close to 3%. Softy still close to 3%. Um, yeah, went up. You stayed in it, then went up a little more. P-time. This is getting close for me. So I just hope it doesn't go back down. Um,
It even went to 495 in the aftermarket.
so I'm hoping that it continues, and because I decided to stay in here. But I'm just hopefully tomorrow morning it'll be at 495 and keep going. And last 3 days it's been steadily climbing after being like a junkyard, so just something that I hope continues. Intel, we don't care about that, but it is trying to diddle with that 40. Um, Google past several days has been going up. Aftermarket, it continued, and maybe it's trying to fill this gap here um, that it had. So we'll see. Yeah, still has a ways to go. We still got Christmas coming, so this could continue. Um, Even Mensana was over 2%.
This
Um,
has earnings tomorrow.
so
This may be very volatile tomorrow in the aftermarket.
we can put in the notes that Apple has earnings watch. Um, do you know if it's after market or before?
After.
So just put that in the notes for earnings watch from Insana. Been doing the same thing. This tech stock has been going up. Um, AN, I think it's Auto Nation or something. Um, I'm
That's
just
correct,
looking at to
madam.
look at it.
That's correct.
Um, but yeah, it's not. I'm not that much of a fan of it. Why am I doing this? No wonder this has been looking weird. Okay. Okay.
I got out of it.
Um, it really hasn't been doing much of anything. Uh, it went up today, but yeah, I'm not really a fan. Um, Ford, I don't care, even though it was 1/4 from 2%. BA, they were going along on this, and I don't know, like, to me, I don't get it. Like, I guess if you get it down here, I didn't think it was that great, but hey, to each
I
his own.
concur. I concur. It's not that great. Neil says if it starts going above 190 and it holds it, that's when you should go long on this.
Yeah, I personally like 200, but I guess 190 is good enough. I've always liked the 200 level for this thing. So we got 204 here. Like, let's say this level here. When it starts to get here,
Can you go
um,
back? Can you go back more? Okay.
so
Okay.
I personally like that 200 area, but everybody's different. The 190 is a little below here, but yeah, I kind of like it closer to 200. Um, I just don't see, unless it's just following the airlines, I don't see what it would be coming up like that. But it does tend to follow the airlines. BA. 222 to Walmart. It was almost 1% up today. So
It's
it's
back to its 52-week high, I believe, madam.
so let's take a look.
It's back to the top. It surpassed it almost.
So we're basically looking at new 52-week high, aka probably all time high. Yeah, yeah, it's basic all time high. So
Almost there.
um, so we're at an all time high, and it's just something that probably let it continue going up. I'll put this in the notes until after the holidays, and then try to get at the top and probably want to do a short, probably whenever the next, let's see, we have, when's the next earnings? 15 days. So I would think it would continue going uh, at this earnings, but probably by the next earnings is where you want to start to wrap up and get the hell out of Dodge. Let's see, 108. I guess this is positive. Uh, yeah, not really. It started out here, so it's just a bunch of craziness. Like where it closed at, it's dipping, then it's coming back up. So it's just it makes things difficult. Um, because if you get it at the end of the day, you gotta watch it slide if you're going long. Almost 0.75%. This did the same thing. They're all doing this crazy dip. If you think it's going long, it's going to do the dip. If you think it's going short, it's going to come up before it comes down. And I hate this. So you can't hold it overnight unless you're shorting it really. So you got to kind of play that game because it seems to do that. We were going into a long day today. So if we're going into a long day, it looks like you got to do a short here and then let it dip, get out, do a reverse. And it upsets me that you have to do that much work for it when it's going to turn around anyway. Um, I got out here. I averaged in a lot. I had like 900 shares. I bought it initially my first 100 shares here and then started averaging in as it got up here. And then I got out at the end. So I made money on it, but I had to wait all day. And this is still a buy. I just felt like shorting it that day. I don't know why. I mean today. This is still a buy. So it's starting to creep up. So um I'm gonna see if it's going to come down. Let me see. It came down here. So it'll probably pop up tomorrow. Then it'll pop up, go long real quick, and then it will come down. And then I'll get it coming down. But this is still a play long term for over the winter. Um, it's just we just keep basically swing trading it and day trading it because it's still in that 38 to 40 range, but it is coming up. So if you want to get this long term, you better get it now. So put this in the notes, play around with Campbell's. Still a long term buy. I guess this went up, it went down, then it basically a little bit higher than where it was at before at the end of the day yesterday. Um, that shows you everything. It wicked up, it wicked down, and then it basically stayed right in the middle. Dollar Tree, it was a 1/3%, and really nothing to write home about. American Airlines, nothing to write home about. It's still in the gutter. Not sure what's going on. I'm just stuck in this thing. McDonald's, it was terrible. I was positive that I was negative a good portion of the day. So this close here, then it popped up. I just should have got out here, um, and I did it. I let it go all the way back down. So I don't know what I'm gonna do with this. I'll probably get rid of it because it's just annoying me, and then it will go up to $300. Um, Open. I guess it looks like Open didn't move. Uh, we've been talking about this for the longest time, so you guys do whatever you want to do here. EBC. It looks like it was 1 penny negative. It basically dipped all day and then came up at the end of the day. Oil slightly negative, which is what I was thinking eventually it would start to come down. But again, all closed here. It popped up and then it just slid down. So it popped up to this basically 107 and slid down. So I don't know. It's just like I don't like when stuff does that because then you gotta wait all day to kind of get your money back. And basically it ended where it started. So you ended up going nowhere unless you went long. Disney is back to the gutter. Um, so yeah, it went all the way down to 80. It's just literally back in the gutter. We have been hoping it would get to 90, and it slid back. So we're still waiting for that. We'll probably continue waiting until the spring. Hopefully I can get out around 90 before this so-called recession comes. Um, Same thing here. I got out of this a little bit early, but now it's past the 12s. Um, let's see if it continues to go up. Um, but I took my money, which was nothing, and ran. And it seems like it wants to start heading back up, but after a long time dealing with this, I just don't want to deal with it. Target, don't care. Keep it moving. That's all I can say. $1.25 for Tractor Supply. Don't care. Keep it moving. Nike. This looks like it had a bad day. Um, Overall, Nike has been relatively strong, but it wasn't a good day today. I heard bad things about Airbnb. I think they had earnings, but um, ew. So I guess they're still making money, even though people can't do their Airbnbs. But I had thought the market for Airbnb had got totally saturated anyway. Had a weird thing happen at earnings, so Dollar General, I don't care about that. So I'm going to now have some type of article for you guys to listen to. I just want to see the positives and negatives on this side just to see if anything jumps out. Um, yeah, it was definitely a good day. Hog was up. Let me see this real quick. Um, I like this also, kind of like as a what you call a stock. Ooh, as a kind of like a Campbell stock. Uh, Maybe you buy it in the winter and sell it in the summer. Where are we at? So, so it got all the way down to 25. I liked it at 30. This was just random made up. So I still like it. If it gets back to 25, that seems like a nice buy to me. Um, let's see. Uh, this was October, November, December, January. Maybe see what January um Q4 is like. If Q4 is bad, that'll bring this down a little bit, or even if they just barely make it for Q4 and then buy it for Q4 and then just keep it for 6 months until the summer and get rid of it. Uh, Put that on a note, Lisa. Uh, Hog slash Campbell's buy, where you can hold it for a minute. Um, let's see right here. Uh, Beyond Me. Yeah, Beyond Me didn't really move that much. Let's look at Rivian. I think I was in Rivian today, right? Yeah. Uh, I think I just got just in and out. I did a quick whatever and then got the hell out. I don't know what to say about this thing. It's other than it's a lot of algos on it. So let me get out of here, go to here, and you guys can listen to this.
Before you go, Miss Green, and start your, can you take a
Oh
picture of the
yeah,
note?
I forgot to ask you what you wanted. Uh,
No, can you take a picture of the notes, please?
um, oh, I'll get it when I get my phone while this is playing.
We can't hear nothing.
All right, so let's do this, then 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 do this, now do this.
September was another tough month for home buyers in the Bay State, where the median price for a single-family home so far this year hit another record. It's now $570,000, up from $555,000 a year ago. And mortgage rates are now averaging 8%, a number not seen since 2000. That means a buyer at the median price pays $3,000 a month in interest, up from $1,100 when mortgages were 3%. It's a jump of $1,900 each and every month.
It makes it more expensive to buy a home. And second, it means that
Cray cray.
nobody wants to sell their home because they're in a lower rate mortgage.
Tim Warren's company,
It's
the Warren
absolutely
Group, tracks
insane.
home sales in Massachusetts and says this September was the slowest on record since 2010, as the nation was still recovering from recession. Just 3,600 single-family homes sold statewide.
So these are numbers that you'd see in a recession?
Yeah, but we're not in one.
Either rates are
I don't know if he's purposely saying that or if he truly believes that. I
Well,
think,
he said we're not in one, but
yeah.
the numbers are like one.
Well, I don't know. That's why I said I don't know if he's saying that knowing what he's saying is wrong or if he truly believes that we're not in a recession.
I think if it was a recession, it would be even worse. I don't think anybody would be buying anything.
Just because people have jobs, I don't know. I think people are calling a non-recession just because people still have jobs. That's all.
prices need to come down for the market to pick up. And that might be happening, at least in the most sought-after towns. Warren examined prices in the 20 most expensive communities. And in more than half, 11 of them, the median price has dropped over the first 9 months of this year. Some of the price drops are pretty big, down 17% in Lincoln, 10% in Belmont, 9% in both Central Boston and Edgartown on the Vineyard, and 7% in Brookline.
Those towns had price increases in the year or two right after COVID, where the interest rates were still low. They went astronomically up, and so they've sort of burned out their ability to get a high price.
But in many of the most affordable communities, places where the median price is still under $500,000, prices are still rising, up 18% this year in Tiny Ashby, 10% in Fitchburg, 9% in Millbury, 8% in Fall River, and 7% in Leominster. Warren thinks the market is poised to take off again if mortgage rates can fall even a little bit, as sellers might then open the door to moving.
If it got down to 6.5%, we'd start to see more people interested in selling their homes.
Now, tonight we're taking a deeper look at this affordability crisis. Ahead here at 5 o'clock, what 5 investigates Brittany Johnson has uncovered about the housing shortage in Boston and what it would cost to get families out of a desperate waiting game. And then at 6 o'clock, our Mike Bodette with the program that's supposed.
All right, so
Why would you
can,
sell your
give your
casa?
opinion.
Why would you sell your
Give me
casa?
1 second. You can give your opinion, and while I find my phone.
Yes, ma'am.
Give your opinion on this article while I find my phone. I thought you would find this one interesting.
Okay, so I love this article. I think it was great. Thank you for showing that we should have articles and videos like this. Very good job. I applaud this. The question is, you can't blame people for not selling their house, because usually when you sell a house, you have to go buy an apartment or buy some other house. So why would you sell your house and get a higher, like a crazy astronomical interest rate when you probably have a really low one, like less than 5% or 5%, when it's now like 8, 9, or even 10%, depending on how great your credit score is. So they're like, oh my God, people are not, buying anything. It's like, why would you buy it either? Why would you sell it or buy? It doesn't make any sense.
All
You
right.
know?
And then the other article that I was going to bring up was the rich the rich recession. Just because we had started this, and I figured we'd try to finish it since we have 9 minutes. All right.
What's your opinion on
The
the
end of this
CASA
year
one?
or the beginning of
I think it's obvious what my opinion is. It's based on my comments. It's true, but it's a lot of lies.
next year, and we'll still have rising food prices and rising energy prices. And unfortunately, the Fed's monetary policy just can't change that.
I think the market has been pricing a recession since the beginning of the year.
And then began worrying about it again.
But our base case is that the U.S. economy will go into recession by the middle of next year.
Turns out that recession everyone was worried about has finally arrived. But right now, it's only for America's rich. Sticky inflation and a weakened stock market continue to disproportionately pressure wealthy Americans as more and more high-income earners file unemployment claims, according to Bank of America's August 2023 Consumer Checkpoint Survey.
The biggest engine for wealth creation in the world, the driver of wealth, is the stock market. It is also the driver of wealth destruction.
So why should we care about this so-called rich recession? Because of something called the wealth effect. That's when the declining value of financial assets leads to a decline in consumption. And since the U.S. economy relies on consumer activity for most of its growth, fewer people buying fewer things can lead to a stagnant economy. Here's why the long-awaited recession has arrived for America's rich and why it matters for everyone else.
(2022) was a year where the stock market was down very sharply, and we started to see home prices turn south, particularly in some of those hot markets where tech jobs, had helped drive those prices up. As the tech sector cooled, you started to see prices fall. So that had a pronounced impact on the net worth of a lot of households in 2022. Some of that has come back in 2023 as markets have rebounded, not quite to the record levels seen at the beginning of 2022, but a hearty rebound nonetheless.
2023 saw a slight bull rally during the summer, despite rate hikes, thanks to a strong and resilient consumer.
A lot of the hurdles that were in place in January are still in place right now. It's not as if we've seen some sort of super positive reinforcement of like, this is why we can get rid of that sort of...
The restrooms are a mile away.
Really? That's your plan for movie night? Yeah, I got rid of our cable.
Uncertainty and replace it with certainty.
Regardless of the country's economic standing, many Americans are feeling the pain of inflation and the cost of revenge spending, as even the wealthy are exhausting their savings and are leaning on credit cards to remain afloat in a tough economy. Companies' recession fears have stonewalled the white-collar job market. Listings compared from a year ago today show a nearly 40% drop in banking and finance jobs and a 50% drop in tech roles.
Thousands more are being laid off in the tech sector. Microsoft is cutting 10,000 jobs, and Google's parent, Alphabet, is reducing its headcount by 12,000 jobs. That follows other hefty job cut announcements from Amazon and Salesforce earlier this month.
The headline here is that any bank not led by Jamie Dimon has been cutting jobs this year. If you look at the big six banks who've all reported, Wells Fargo is the biggest sort of perpetrator here. They've cut about 11,000 jobs, or about 5% of their workforce, just this year alone. And you look at another one, and that's, apart from Wells Fargo, there's also Goldman Sachs. And both of these institutions have had these, businesses that are hit into the wall of high interest rates.
UBS's 2023 Global Wealth Report found that America lost 1.8 million millionaires in 2022. The main culprit? A weak stock market. The S&P 500 dropped by 19% that year. For a current pulse on how the wealthy are holding up, Bank of America released its August 2023 Consumer Checkpoint Survey. It found that high-income households have a weaker economic confidence and are more cautious on spending due to factors like soft wage growth and job creation for high earners, which may be tied to the rise in unemployment claims from the group.
There are some higher income households that their budgets are significantly stretched. They have leaned against credit to kind of bridge that gap. Household debt has gone up, in particular credit card debt.
Credit card debt has swelled to more than $1 trillion. Despite higher income households buying more discretionary items, this still points to another headwind for the wealthy.
When millionaires look at their risks right now, they mainly see the stock market because that's the source of their wealth.
Despite rallying in summer 2023, the stock market is now getting hit by surging bond yields and the prospect of higher interest rates for longer.
Some people say we could have a weak stock market for a long time because interest rates are so high. That would mean that there's not going to be much wealth creation, may not be much wealth destruction, but unless you're adding wealth, unless you're growing millionaires, all those companies that survive based on rich people spending, whether it's luxury real estate, whether it's luxury fashion, whether it's boats, cars, planes, all of those companies are going to see slower growth because they're all driven by the stock market. And it all depends what happens with that stock market in the next year. The second quarter for all the luxury companies saw something we hadn't seen at least since pre-pandemic, which was a decline in U.S. sales. Not just slower growth, but an actual decline. LVMH, which is the giant, they always succeed. They actually reported a surprise 1% drop in U.S. sales. No one expected that. That followed Richemont, which owns Cartier, lots of other brands, reporting a 4% drop in the U.S. So the top 20% of Americans by income account for over half the spending. I mean, we sort of know this, that the wealthy, those with the most money, spend the most. And they have, throughout the past 30 years, helped an economy where the middle class has lost ground.
The stickiness of inflation has even millionaires cutting back on spending for fine dining, luxury vehicles, and charitable donations.
Investors are dealing with two things, which is market uncertainty and low visibility. And by market uncertainty, what I mean is that because of market uncertainty for investors, it makes it difficult to invest because they don't know sort of where things are going, and that leads to low visibility.
Consumer spending is a huge driver of economic activity. So when the wealthy stop spending, it can slow the whole country's economic recovery.
They have to keep spending to keep the economy going, to keep the consumer economy going, to keep consumer companies profitable.
Around the world, though, the rich are expected to get richer. According to UBS's report projections, global wealth will rise by 38% over the next 5 years, reaching $629 trillion by 2027. And the number of millionaires is estimated to grow to 86 million, up from the 59 million in 2022. And a recession in the U.S., along with a potentially underperforming stock market, could create the right conditions for America's rich to bounce right back.
The wealthy right now, the mood is very grim because they see high inflation being very sticky and high interest rates sticking around for a long time, which means their stuff, their assets, are going to be worth less.
Worth households, they tend to have a larger percentage of their portfolio in cash. And a lot of that's just around wealth preservation. What you're going to see is more high net worth investors putting money into safe haven investments and just really biding their time. If the economy does slump, if we do end up in a recession, that those investors now have the dry powder to be able to buy other assets at distressed prices. There's an old expression that a recession is like a garage sale for the wealthy. That's the time where a lot of wealthy investors buy assets at distressed prices that can then ultimately grow their wealth over time as they rebound.
All right, so I just wanted to finish this article from last week. You can give your thoughts. I'll just be quick. We have less than 1 minute. To me, it's fake news. A lot of people who